Hello and welcome to BQ Prime. You're watching Earnings with BQ, and my guest today is Saugata Gupta, MD and CEO of Marico. So, Mr. Gupta, thank you very much for joining us on BQ Prime.
Yeah.
So, to begin with, you came out with a healthy set of EBITDA margins. What went behind those increase in margins?
So if you look at it, I think ever since last year, FY22, when the Ukraine issue started, there was a significant inflationary trends in a lot of our input costs. That led us to a lot of cost management. Having said that, I think what we have been able to do is, besides driving efficiency in the system, is starting last year, second half, we continued to experience significant input cost pressures easing out. And therefore, that has led to some of the margin expansion which is happening. Having said that, I think next year, and we have done this margin expansion without compromising on A&P. If you see YOY and also over a 4-year CAGR, our A&P has continues to increase, because we believe that ultimately cutting A&P to manage short-term margins is something which impacts brand equity in the long term. So therefore, our investments are in place. Going forward, I think what we needed to do is, as you know now that our digital and food business has got some scale, it is extremely important to concentrate on its profitability. Food, I think we have seen that after you get scale, for example, our masala oats business is extremely profitable. I think we have to get some of the others like honey, soya nuggets, or say the snacking business into 100 crore plus for it to get into that path to profitability. As far as digital is concerned, again, thanks to the overall environment, I think the spend levels are lower. Anyway, compared to a lot of other brands from similar sizes, our cash burn has been low, but there's a great opportunity again to manage profitability. So these two will also contribute to that, gross margin improvement next year, along with some input costs. We plan to plow back some into core to drive, category growths, because as you know, the core category growth has been, a little soft, and the balance 100 plus bits will get transferred into EBITDA even for next year.
Sir, do you think the raw material prices or input cost prices have bottomed out, or there is still room for that? And are we going to go back to pre 2022 before the Ukraine level of input prices? Because there also we saw some bits of cooling off happening, right?
I think it's largely bottomed out, because if you look at crude, it's unlikely to soften unless there is some, growth stress in the rest of the world. I think it's priced in broadly. Obviously, there is still a sliding down that's happening in vegetable oil base, because it's still significantly higher towards pre-Ukraine. But I would say it will be a milder deflation compared to this one. And as a result, what we will see is that in the first half, there will be a significant, advantage you will get. In the second half, it will slowly be, because that bottoming out had already started somewhere in the second half of the last year.
How about the volume picture? Because the India volumes grew by nearly 5%. But do you see this volume growth coming? I mean, increasing from here, because there are challenges which many of your peers have also spoke about with respect to volume growth.
So I would say that if I look at the annualized volume growth, this year will be better than last year. It's very difficult to pinpoint a number, and I would think that growth recovery will be gradual. I don't see a exponential kind of a recovery. I think rural consumption issues are bottomed out, and therefore, unless there is a very adverse monsoon or something, things will be better. So all I can say as far as volume growths are concerned, compared to last year full year, this year we'll be able to deliver better volume growths.
Will you be able to give us an understanding of how the rural consumption is happening and what kind of volume we can see there as compared to the urban consumption, which has been steady?
So if you look at rural consumption last year, there were two factors that contributed to the rural consumption stress. Number one, there was significant food inflation. Now, whenever there is high food inflation, since there is a limited disposable income, what people tend to do is to titrate or downgrade FMCG consumption. Secondly, because of input cost increases, FMCG companies either took price increases or they adjusted sizes, which is shrinkflation. Now, shrinkflation historically in high penetrated categories, what we have learned is that consumers have a fixed outlay per month. So whenever you adjust MLH, it doesn't lead to higher transactions. Actually, it leads to a consumption drop. Now, both these are, I think, have softened. I believe that, for example, we have passed on some price drops of Parachute. And I think also the food inflation has reduced. And also, I think we'll be anniversarizing that thing that started off in March last year. So you look at the combination of all three. All I can say is the rural consumption decline has bottomed out. Even if you see quarterly, the trends are improving. Now, it will be a gradual improvement and also depends on how the monsoon pans out.
How do you see trades looking at, because we understand that general trade is little slow, but modern is growing at double digits for you. How do you see these two trade distribution channels growing?
So I think the way to look at it is that modern trade and e-com is essentially urban, while general trade is a significant portion of rural. So automatically, I think rural improves, general trade performance will improve. Having said that, I think we are also ensuring that are we completely happy at the way the general trade is performed? I think no, and we are putting in place, and I think there's significant transformation that is happening in the overall general trade business. I strongly believe that the Indian general trade is extremely strong, innovative, and resilient. And therefore, even 10 years down the line, I believe general trade will continue to play an important role in the FMCG business. And in fact, given the size of our country and the overall this one, direct distribution will continue to be a source of, especially in rural, a competitive advantage as well as an entry barrier. So I think, yes, there is some stress, but I have tremendous faith in the reinvention, the silent reinvention that's happening in the general trade business model. And as I said, that general trade has a far more rural skew. I mean, modern trade doesn't have the rural skew, and therefore all three channels are going to coexist. In India, it will be an and growth story and not an or growth story as far as the channels are concerned.
What about the new channels which are coming within the modern trade, like the Udan and then Geo, means Reliance Retail's versions which are coming which are penetrating into rural areas and tier 2, tier 3 cities. How do you see those growth giving growth drivers for you?
The way I look at it is this: that I think India is a country with tremendous potential, and there's a huge long-term growth potential. Some of the category penetrations are still low, especially in foods where we see a huge journey of unbranded to branded and packaged food penetration is low. In personal care, obviously some category penetrations are high, but there are still opportunities for growth. India is a growth story. As long as you have strong brands where you are number one or number two, as long as you continue to innovate and ensure that you have a differentiated portfolio play across different channels, I think you can grow along with this one. I think we are extremely lucky that India, our home market, is invest to grow market. And compared to the rest of the world, we are in a unique position. It's a very, very strong, resilient economy. And therefore, I think it's not a question of saying that who's the margin compression, volume declines will happen. All these you have to leverage and partner and drive growth together. But what is important is each channel has a role. And for example, we believe e-com has a role for driving innovation and premiumization along with modern trade and growth of foods. We have invested in a food GTM to drive food. We believe, sometimes challenger brands can ride on some of the cash and carry channels. So I think each channel has a role. And it is extremely important that we partner a channel or a customer holistically to drive growth together.
You spoke about the fact that the food segment is doing well. It's reached a threshold, and profitability is the next big goal in that segment. Along with that, is there a plan to expand yourself in that food segment as well?
So I think think we are going about cautiously. Okay, our entire effort is, I believe that Saffola was a very under-leveraged brand. We want to expand by expanding the total addressable market to Saffola, and therefore we are in better for you foods across. And if you look at it, breakfast, in between meals, immunity, and protein, plant protein are the four themes which we are working at. There is obviously if you look at in terms of distribution, again, there is a skew towards e-com, modern trade, and urban. I don't think we have a right to win in terms of two things, either in indulgence or getting into very, very impulse channels like Pan Plus or a massive. So we want to focus ourselves where we have a right to win and grow steadily, but grow also profitably.
Will, does that open up opportunities of inorganic growth as well for you if when you're looking?
We are continuously looking at opportunities, especially in the digital space. But as I said, that we will look at opportunities not to give scale, not necessarily scale. We will avoid commodities or fragmented categories, but whatever that gives us something which we believe has a headroom for growth and has a category profitability which is above the threshold, we'll certainly look into it.
Finally, your international operations, 10% YOY growth despite forex headwinds. How do you see that business growing, and what is the kind of challenges or drivers there for you?
Look at the international business, I think it has been extremely resilient. For 10 quarters, one quarter was 9%, but broadly we have delivered double-digit constant currency growth. The reason that we are strong in our international business is that we have built businesses based on fundamental sound principles organically. And it's not that we haven't had shocks in terms of currency or inflation. Some of our markets like Bangladesh, Egypt, South Africa are experiencing significant inflation and currency depreciation. It's just that we believe that whenever there is stress and disruption, the strong get stronger and the weak gets weaker. We believe in that, and therefore we have been extremely resilient. We have been also diversifying our portfolio, and we intend to replicate the Bangladesh model into Southeast Asia, where right now it's a very reasonably profitable business, double-digit growth. And I believe that we are challengers in Middle East and North Africa, where I think there is a significant profit pool, a significant market share, and a revenue pool to be gathered. We will continue to do that. And we are extremely confident that our international business will be able to give annualized double-digit constant currency growth.
Just to get a perspective there, since you are operating in some of the South Asian markets, some of the markets are facing a huge headwind in form of inflation. How does product expansion happen in such a challenging environment for you?
So, luckily, if you see in our Southeast Asia, main market is Vietnam, which is insulated from there. But I think Bangladesh, Egypt, and South Africa are experiencing that. I think we have been able to ensure that we manage costs, ensure that we pass on, we absorb some of the inflation, pass on this one, and continue to innovate and gain market share in each of the categories. Obviously, we can't beyond the point influence category growth when there is high inflation. But I think run a tight ship and manage. And if you look at international business, continues to deliver profit growth in spite of these things.
Mr. Gupta, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Pleasure. It was my pleasure. Thank you.